Well, it's indeed a key topic, also given the sheer amount and size of regulation that's come through since the financial crisis. I opened up the panel also mentioning some of the research that was done. So we're talking nearly 90,000 pages with annexes of regulation for financial services. So that is a lot. I think we started by recognizing that, of course, Europe has achieved to create a very sound basis for managing systemic risk, making sure that banks are sound and safe. I think, of course, the challenge, as highlighted by the Draghi and Letta reports, is now about redefining a culture of risk across Europe, getting our EU savers to invest, unlocking that capital for financing Europe's triple transition. A lot of ideas were exchanged on what could be done to have a more goal-based or outcome-based legislative process, starting from level one, defining clear objectives, high-level strategic objectives that then need to be assessed along the way. I think a lot of time was also spent on level 2, level 3, and how we should go about those more detailed legislative and regulatory proposals. And I think there is general agreement in saying that we perhaps were too rule-based. We need to look into, indeed, perhaps coming back to some more principle-based. There was also a discussion on ESAs and how they should look into this and embrace a more outcome-based regime. I think a few proposals also were discussed. We talked about potentially also giving ESAs a competitive mandate. We've heard that yesterday also on a panel, so I think that is to be discussed further. But of course, given the importance and the sheer size of regulation impacting the asset management industry, this is a very important discussion to be had. And I think there are a lot of proposals on the table. The Less is More report also, which was presented by Elisabeth de Laus, is also a very interesting starting point there. So there's a lot of food for thought and transforming those ideas into action. Well, I think as was said on many occasions, and Michaela Forelli underscored this in her closing remarks, we have a tremendous momentum. I think this was also supported by the Draghi and Letta reports, acknowledging that I think our biggest challenge right now is actually really moving the capital in Europe that's available, that sits idle in bank accounts, saving accounts, into productive investment, unlocking also some of the risk-taking for institutional investors. And as far as we are concerned, also from an EFAMA's perspective, I think we tend to be optimistic about the direction of travel. I think what the Commission also has clearly recognized is that a number of the big levers that we have at the European level are unfortunately not in the legislative remit of the European Union. And therefore also the fact that the Commission has decided also to revert to recommendations instead of legislative proposals around the topics of the investment and savings account, or the savings and investment account, I should say, and the topic of pensions, which is the package that we are eagerly expecting now in a couple of weeks, shows that I think there is that recognition. Of course, the challenge is going to be for all stakeholders, including for the industry, to make sure that these recommendations are being implemented by individual member states. But we are confident that our institutions, so the European Commission to start with, but also civil society can play a major role in this, and certainly the industry and industry associations like EFAMA will play a key role in driving this agenda forward, and also making sure that these recommendations get translated into action. I mean, as far as ALFI is concerned as well, I think we believe, and we've done a bespoke study on this with McGill on funded pensions, is that funded pensions are probably the biggest lever for Europe to develop deep capital markets. So I think this will be a key item to be watched in the context of the broader agenda of the Savings and Investment Union. But we are confident that I think the concept that is now being worked on by the Commission in approaching this in a combination, as I said, of recommendations and legislative proposals, also on the PEP, as we know, and the IORP, will, I think, enable member states to really put this into action and actually achieve the results that we all hope for, meaning deploying more capital into European capital markets. We have carried out work with our board of directors as ALFI, identifying the key roadblocks that still exist for asset management. And now really talking about the asset management industry across Europe. And one of the key findings of that report and of that analysis was that 95% of the roadblocks are actually outside of the scope of European supervision. So, making changes or significant changes to that supervisory model will not help, will not, move a single euro of unproductive savings into investment. Therefore, we, and this is also EFAMA's position, which was very well articulated in the EFAMA paper published on supervision recently, is that instead ESMA should use the existing tools at its disposal also to address some of the roadblocks that still exist in this supervisory field, but those can actually be addressed. But unfortunately, bigger roadblocks are outside, but there also we welcome the initiative from the Commission, which they have also articulated in their paper in March on the Savings and Investment Union roadmap, that they were eager also to very seriously address protectionist measures from individual member states, through decisive action. And so I think there again, this is probably a space that is very often outside the direct remit of European institutions, but I think there collectively we need to make sure that we first of all identify these roadblocks and then put enough pressure on those member states for them to correct and take corrective measures. So I think broadly speaking on supervision, I think it's very important to restate this, that when you look at asset management, we believe that the current regime and functioning of ESMA together with local NCAs works well. I think we need to recognize also the success of the model, supervisory model that was built over decades now, 3 decades, as we speak, since the first UCITS directive, and which has also created this amazing success of the UCITS and the IFMD being true global brands, because remember, according to the EFAMA figures of the 23 trillion euros funds domiciled in Europe, we export 5.7 trillion outside of Europe. So this is a tremendous success, which has also developed expertise and true centers of excellence across the European Union for servicing these investors. And this should not be dismantled that would be a risk if we were making significant changes to the supervisory model.